What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What's good, baby? It's your boys. We back in the saddle again for another Real Estate Friday. Cliff, what it do, baby? What's going down?
Man, a great day. You know what I mean? Decent week, decent week. Trying to get that bag as always. And great day. Gotta get shout out to my little baby girl. Turned 1 today.
Oh, what you say,
Yeah,
Chuck, man? She
yeah.
1 years old. Baby, I know y'all busy over there big time.
Telling you, telling you, man.
Busy over there, Doc, man. So, y'all, we got to give him a hand clap of praise just for giving y'all some time today. You know what I'm talking about?
You right.
A 1-year-old baby? Shoot. But I got to
Telling
ask the question. I know it was her birthday, Cliff, but
you.
did we get the bag?
Always, bro. Getting that bag.
Hey, we got that bag, baby. Yes, sir. You know, your partner, I got that bag. And once again, we look better than you. It's all good. It's all good, baby, man. But guys, we gonna jump right into this thing, man. Jump right in this thing. Y'all, you know what we do every single day, guys? We jump right into it. We're gonna jump right into the current market analysis real fast, guys. And we're gonna do something a little bit different today. Typically, what happens is we give you guys our thoughts on what's going on, and again, our thoughts is pretty accurate. But we also want to bring in some additional counsel here, so you can actually see in real time if what we saying is actually correct. Cliff, can we do that for the people?
Let's do it. Yeah.
Let's do it for people. Okay, guys, we're gonna bring in our partner Patrick McDavid and also Tom and his team for the Valuetainment team. They actually did a nice little breakdown of what's going on in the market. So we're gonna bring them in real fast, guys. Here we go. Let's listen to what they got to say, and then me and Cliff will kind of give our little 2 cents as well. All right, guys, let's jump into this thing. Let's go get it.
I had a guy call me from LA, and him and I are having this conversation together. He says, "Look, do you have any interest of ever getting to the mortgage business?" I'm like, "Are you serious?" He's the top mortgage guy in LA, in Glendale. He says, "Do you have any interest of getting into the mortgage business?" And I said, "I'm good, man. I don't have any interest in business. That, well, when it's doing so well, you can make so much cash. I'm not interested in cash. I'm interested in equity. I'm interested in building the company."
Cliff, does that sound familiar, big dog?
Yeah, it sounds exactly what I've been saying, man. The market is slow, and what I mean, 90% is a crash. That's what you call crash.
Now watch this though. Watch this. He just said, guys, that he doesn't want cash. He's interested in equity and building a company. Now, is that the wise perspective to have, Cliff?
Yeah, equity is wealth. That
Yes,
is what
sir.
wealth is. A lot of people get
Yeah.
it mistaken between cash and equity, but
Yeah.
equity is where you get that money.
Come on, preach that gospel, man. Let's keep it going, guys. Let's keep it going.
He says the following to me, flat out. What I liked about him is he had zero ego. He says, "Pat, I don't care what anybody's telling you. This is a different guy than the other guy I spoke to." He says, "Mortgage refi business is down 90%. 90% is down."
Cliff, if a market is down 90%, is it a vibrant market?
No, no,
No. Now, strangely, didn't you say the same thing last week?
that's what I'm saying. Down 90. That's a crash. That is a crash in the market. We The market is crashing right now.
Guys, this is a licensed appraiser who's actually appraising properties. He actually said that refinances have came to a halt. Patrick just confirmed it from a mortgage broker in Las Vegas. So we ain't giving y'all no smoke memories. This is we active. It's real. Would you agree, Khalid?
Oh yeah, it's this is just the beginning. This is the beginning of the crash. This is going to continue because they just raised rates yesterday. That hasn't even got into the market yet. So I was looking at houses this morning, Dale. Bro, it's the houses that I've seen, the prices that I've seen drop. I've seen houses drop $100,000.
Wow.
hundred
Yes,
thousand.
sir. Me too. Me too, guys. But watch. Just keep on listening, guys. Keep on listening. Don't take our word for it, even though we are experts. Listen to somebody else. Here we go.
We're doing no refis. We're doing none of that stuff.
No
Do you have the Yahoo Finance article about Las Vegas, how Las Vegas Board of Realty, they asked them, they said, so what's happening with, because, the way to judge it is to find out the Board of Realty in each city and state and how they're doing. And a lot of times they judge it based on Las Vegas. So watch this article here. If you can zoom in a little bit more so we can read it a little bit more. Okay. Housing market activity. This is from 6 days ago. Housing market activity is crashing and it threatens to push U.S. into recession just like it did in 81 and 2008. Now go up. If you look at the data, we're talking, there you go in the middle. Zoom in a little bit. Las Vegas is one of the leading indicators for home price action in the housing market like we saw in 2008. And the frenzy, recent frenzy, we are absolutely feeling the heat here. The buyer pool has, for the most part, dried up, says real estate agent in Las Vegas to Fortune. Go a little lower.
Cliff, didn't you say home sales were significantly down too?
Yep, that's what I'm saying. Market's on its way down. This is just the beginning.
Let's keep listening. We almost there, y'all.
Go a little lower because now they're talking. Go, keep going. Story continues. Keep going. Right there. Realtors are feeling it big time as well. I put a call into the Greater Las Vegas Association of Realtors. An employee I spoke with said that they were averaging 300 new members every month, which means like 300 new realtors every month. This month, she has estimated 120. However, she's been processing about 30 realtor withdrawals a day, not a week, a day.
That's 900 negative.
A month, Tom.
Wow.
That means every day around 30 real estate agents in Las Vegas alone are calling it quits. Okay?
Cliff, is that a vibrant market?
Nah, that's a dead market.
I would be laugh, y'all. It's just we're not the gospel. We just know what we're talking about. We almost there, y'all. Let's keep going.
Okay? And if you go a little lower, she'll talk about the fact that 38% is down. Look for the number 38%. Keep going. Anyways, there's a 38% number about what's happening with the refi business. So it's a very interesting market we're in right now. Different economies are feeling it. People are feeling it. But a lot of times people who don't want to talk about what's really going on with the market, all they're talking about is unemployment. And the unemployment numbers are going to be felt next year, not this year. Person asked me a question on Twitter, and Jed, you were asking me this question. I'll say this, and then we'll toss it around to the rest of you guys. Is this a good time to buy? And my advice is very simple. If you're thinking about buying a house today, buy a house today.
Sure.
But make the offer you would make a year from today. So if you're buying $1 million home, make a $770 offer. If you're buying a $600,000 home, make a $490 offer. If you're buying a $450,000 condo or home in certain parts of the country, make a $370 offer. But do not make the offer you would make in today's economy. Because
have we not been preaching this the whole time, Cliff?
Been saying it. It's we saw it coming.
Well, we almost there, yeah. This is the current market analysis side. We almost got.
There's still room, I believe, for these values to go down the next 12 to 18 months.
Yeah, Zillow is showing, this is the average run-up of the last year. And so we don't want to say the address or anything on here, but you can take a look at that, Pat. You see that lump? That skyrocket right there over the last 12 months is an illusion. So you have 5 years of some modest growth, 2-3%, just growing along. See there? And all of a sudden, wham, we print money, the asset changes. So let's go take a look at this house. What was it, October of 21?
1.3.
1.3.
Yeah, so
Watch
right
these
now
numbers.
it's at 1.8. It was 1.3, and then go back to October 20.
Watch these numbers.
880.
See
essentially.
that where
it's an
where it had been.
home that's
There it
just
is.
for 1.8.
So if you were going to go buy this house right now, you would go in there and say probably 1.1.
That's exactly what I'd be making $1 million offer on that.
That's exactly your advice, Pat.
Wow.
Is absolutely true. I look at it this way. I did a little research for some numbers or some basic numbers.
Listen to these
I'll do this
numbers.
really quick. Right now, let's say someone was buying a $500,000 house. That's it. And you're going to do a 30-year fixed, and you're going to put 20% down. So standard deal. In March of this year, you would have had a 3.5% mortgage or an $1,800 payment. Reasonable, for a family. Right now, at 7.5%, that's $2,800, up $1,000.
Crazy.
At
Crazy.
10.25%, where you and I both think this is going, it's double, $3,600.
Wow.
So the buyers are being crushed. Now let's go the other way. Let's say the 1,800 was all that I could afford as a buyer. When the interest rate's at 7.5,
Watch.
the $500,000 house I can afford, I can only afford a $325,000 house. So my buying power is down almost 40%.
40% decrease. Didn't we say, Cliff? Didn't we say there's going to be a pullback between 30 to 50%? Did we not say that?
Exactly what we said. Been saying it for months.
God, we wasn't playing no games, man. This is what's actually happening right now. Now. Okay? This is not hope and mirrors. This is not, I'm sorry, smoke and mirrors. This is not hopes and dreams. This is numbers. Math. Cliff, are we going crazy, Doc? Are we going crazy?
Nah, been saying this. You cannot print money and expect no problems from that. We printed too much money. The Fed had been saying transitory for a minute now.
Transitory.
They finally admitted they wrong, and this is what is the result. 30 to 50% drop in home values. This is just the beginning. Everybody get ready. The unemployment rate is going up. Get ready. You should buckle down. Save your money. Do not spend it. It is coming, and it's coming hard in 2023. It's going to get bad.
It is. Now, guys, we're almost done, but watch when he gets to the interest rates. That's really going to make you a crap a brick. I'm going to keep it family friendly. Crap a brick. Here we go.
So what you
Watch
have
this.
right now, if you are out there and you have to change jobs, you're being forced to go to another city right now.
man.
I would seriously consider not dumping the house you have, lease the house you have.
Yes.
Because you're not going to be able to sell it right now.
No, you're not.
You're and the price is going to come back down. But where you're going, the interest rates are so high. So if you sell, where do you go and what do you buy?
That's right.
Your payments.
You know what confuses me is the following: those who are delusional because they're in the industry and they're saying that's not going to happen. There's a very big difference between power of positive thinking and not understanding that the paranoid survive. I believe you should read both books simultaneously. Read the book Power of Positive Thinking because it's good to have a positive attitude, but do not be delusional because you're in real estate and mortgages thinking, no, it's not going to happen. Year ago rates were roughly 2.9%.
Watch this, guys.
In May, when Dave Ramsey called it fear porn, rates were at 5%.
Fear porn.
And today, rates are 7.5% for 30-year interest. And everyone's saying it's not going to go to 7.5%. Never. What are you talking about? Do you realize from 1981
Watch
or
this.
82, I don't know.
Look
what
at
the
these
year was,
rates, man.
For about 9 years straight, interest rates in America were above 10%.
Yep.
Can you pull that up, please? Do you
Watch
realize
this.
This is the part where people are absolutely delusional. Go to the rates I
Watch
sent
this.
you. No, it was one that just showed the charts. There you go. That's the one.
Yeah, this
Crazy
is Paul
town.
Volcker's Endless Halloween.
So
Look
check
at
this out.
this.
Zoom in so everybody can see it. Let's
Look at
first
these
look
rates,
the
Cliff.
first chart to the right, which what we've been used to for the last 20 years. Yeah, go to the right. No, don't worry about the stuff on the left. Okay, so what is it right now? Go a little lower. Go a little lower. Lower. Okay, 2021, 2.96. The 2010, 3. 3.9, 4.5, 3.9, 3.6, 3.8, 4.1, 3.9, 3.6. Oh, rates are cool. This is what we're used to. This is BS. This is a lie. 4.4, 4.6, 5. This is a lie. Then it's real. 6, 6, 6. Keep going. 6.3, 6.4. Go to 2005. Okay, 5.8, 5.8, 5.8. These are numbers that we need to stay around.
Yes,
6.5,
that's correct.
6.9, 8. Now watch. This is 2000. We're at 8, 7.4, 6.9, 7.6, 7.8, 7.9, 8.3, 7.3. For a straight decade, it's around 7 plus, right?
Wow.
Now you got 1990. Just 32 years ago, it's at 10.13.
crazy.
It'll never crack 10%. It won't happen. Okay, go to 1989. Let's look at 89. Now watch what happens. So that's 2 years, 3 years, 4 years, 5, 6, 7,
Look at
8,
this rates.
9, 10, 11. Keep going. 11, 12. 12 straight years. 30-year fixed rates were above 10%.
Crazy.
Let me say
Wow.
this one more time. For 12 straight years, 30-year mortgage rates were above 10%, and people are saying it's not going to go to 10%. Brace for impact, folks.
Yes.
Read Power of Positive Thinking and read Only the Paranoid Survive. Long term, everything's going to be fine. Short term, these rates are going to get to 10 points.
So, guys, we were not trying to be Debbie Downers, guys. What we were saying was, for over 6 months, 12 months, me and Cliff have been saying the exact same thing. We've been called fear porn people. We've been called fear mongering. We don't know what we're talking about at all, period. That's math, numbers. Right now, Cliff, in the investment range for someone in new construction, guess what rate that I got quoted? Me,
What's that?
10 and a quarter.
What?
10 and a quarter.
For the
This is
refi?
no, this is new construction. 10 and a quarter. Refi, 8.1.
Wow.
Me.
Wow.
Me. Now I can buy down the rate if I want to because of my cash. That's fine. But I'm saying that, guys, because it's already hitting the secondary market, the investment market. This is the place where we actually acquire properties at a below wholesale standpoint. We're getting 8% on DSCR, which is a long-term financing. Do you know what it is for fixed and flip? You're at 11. 11%. It's time to get out of fantasy world, guys. It's real. Cliff was right, man. Brace for impact. Patrick's right. Brace for impact. It's coming. If you ain't got no plan, guys, don't you worry. That's why we're here. So I know this is a lot of bad news, but it's important to know where you are, how you got here, and then we're gonna tell you how to counter move this. Cliff, what you got to say about what you heard, brother?
Keep repeating it. This is just the beginning. This is just the beginning. It is going to get bad next year. This is not the end of the interest rate hikes. They're going to continue. They keep raising them, keep going up. And the difference was in 2008 is that it hit specific markets. There were some markets that were resilient. There were some markets that where they got caught was where those funky loans were really in excess. Like Florida got hit real bad. Las Vegas got hit real bad. This is everywhere.
Yeah.
This is the whole U.S. This is not 2000. Like I said, 2008 could have been Dallas. We went flat. In Philadelphia, they went flat in 2008. This is everybody.
Everybody.
There's a new reality coming. There's a new reality.
It is. And guys, you saw, I believe in 81 and 82, it was for 2 years at 16%. We're going there. Fix your mentality. We're going there, if not higher. Because again, in the 80s, we had a smaller GDP, a smaller economy, less money, fake money circulating. In the last 3.5 years, we've printed 40% of this nation's currency in the last 3 years. Let's keep it a band, guys. So again, this is not to scare you. This is to say, this is where we at. Now let's begin to prescribe some counter moves. All right, you ready, Cliff?
Yeah, and I want to break it down just real quick.
Go ahead.
What exactly happened with the houses? If you have 10 houses and there's $10,000 in circulation, it's $1,000 per house.
Yeah.
Okay, 10 houses, $10,000, $1,000 per house. When you print an additional 10,000, the houses go to $2,000 per house.
Yes.
You printed that money.
Yes.
That's why the values went up over the last several years. It was all fake money. It's fake. It's not real. Because how many houses increased? None.
None.
But the value of the houses went up because of fake money. This is gonna get
Yes.
bad. This is gonna get bad.
Yes. It is, guys. But again, don't you worry. Your partners is here. All right. Now we got through the current market analysis. Okay, breathe a little bit. Exhale. Here comes the good news. Now that we know where we are and where we're going, now, Cliff, let's begin to unpack this statement. How to make the proper offer in a changing real estate market. Okay. We're going to talk about that. This is probably going to be one of the most important real estate lives you've listened to. Okay. Because we want to give you tangible things you can apply now. Okay. So, Cliff, let's go to the first point. What's the most important negotiating points up front?
Knowing the market.
Mm.
Knowing the market. You know where it's headed. You know what's happening. We've given you all this information. You've seen what Patrick Bet-David just said. You've been hearing what we've been saying. Be aware of the market. When you're in this, when you're going out and you're making offers, when you're going out and you're in the workplace, understand the market that we're in. That's the most
Yes.
important, so you understand what's happening.
Yes. Yes. Now, what he means by understanding the market, guys, is okay. Understanding, okay, is in this neighborhood, okay, or in this city, okay, what is the proper exit strategy? Is it a flipping standpoint or is it a holding standpoint? Okay, have your exit strategy out initially first. I can tell you right now, if you have a flipping mentality, it's going to be hard because there's not any buyers there. So really fix and flip is probably the last strategy you should have right now. The last. Unless you got a property for free. And you can sell it for $20 something. You know what I'm talking about? Like just to be
Yeah,
honest
true.
with you guys, because of
True.
the fact that there's so much inventory, there's gonna be so much inventory that comes, bad asset inventory that's gonna need to be built out. And that's why we're giving you this teaching, okay? Number two, I would say also when it comes to understanding the need of the seller. What is their ultimate need? Not what you think they need. What is their ultimate need? Let them tell you. Okay? And guys, I'll give you a little bit more game. Typically, when you're negotiating, you could creatively ask for some questions, and you may be able to get the seller to give you what their baseline price point is. Once you see what that is, then you can really begin to negotiate. If that makes some sense.
Exactly.
Also, the condition of the property. What's the condition of the property? Is it in bad condition? Is it in good condition? Is the property upside down? Do they owe more than what the property is valued? That's another strategy that you have to look at then. So really understanding the pain points of what's going on with the seller and the property and the subdivision and the location. Would you agree with that, Cliff?
Exactly. Because your solution should fit the problem,
Yes.
right?
Yes.
So
Yes.
again,
Yes.
this goes back into what even Dale is teaching in his course about if
Yeah.
the property is underwater and being able to do subject to. And y'all can
Yeah.
learn more about that. That's coming soon. But
Yeah.
that would be a strategy, that a solution that fits the problem. And that's
Yeah.
about to happen. You are about to
Yeah.
see a lot of houses start going underwater.
A lot.
Especially anybody who bought a house this past year.
Mm.
In the last 2 years, let's say the last 2 years. If you bought a house
Yeah.
in the last 2 years, you're about to go underwater.
Yes. Put like this, guys. Grand Homes is probably the biggest builder in Texas. This is Texas, guys. Texas. I get emails from them probably once or twice a week. Okay. On their new construction properties, they've slashed the sales prices $100,000. 100,000. Whether it is 600,000, 700,000 price sales price, 900,000, a million, they slashed it 100,000. It's crazy. It's crazy. So understand that. Number two, this one is important as well. How Cliff, this Cliff, I'm gonna let Cliff go in on this one. How should you be utilizing the appraisal reports and the process?
The process is what I would always suggest is speaking with the appraiser
Mhm.
and giving him giving them the information you think is valuable.
Mhm.
What you've done, if you've done any renovations to the property, what you've done. If you have comparables, what comparables you used. And I suggest don't give him comparables that don't make no sense because he gonna just throw out everything you give him because he's like they don't know what
Yeah,
they're talking about. Don't
yeah.
If there's a house for sale next door, don't go 3 miles away and
Mhm.
go, well, this house kind of looks like mine. No,
Mhm.
because location is the number one thing we're gonna look at. So provide information. And another thing is this is an opinion. It's an
Mhm.
opinion of value.
Mhm.
It is perfectly fine to get multiple opinions. Just like you
That's
go to a
correct.
doctor. Sometimes it's good to get multiple opinions. Then
Yes.
you start seeing where different professionals view your property.
Mhm.
And I would
Mhm.
suggest doing that. And you know what? The one that works best for you, that's the one you go with.
There you go, guys. You better get used to ordering 2 or 3 appraisals. You better get used to that, guys. Specifically in this market. Again, plan for the worst.
And I'll
Plan for
even say
that.
this. I've had appraisers who've been in this industry for decades,
Mm,
decades, tell me
mm.
this is the toughest environment they've been in.
Wow. Wow. That's that right there. That's your testament right there, guys. It really should. So again, get used to ordering multiple appraisals. Get used to that. Okay. On one property, I ordered 5 appraisals. Five. Five. And this was in the luxury market. Oh, yeah. In the luxury market, that's dead.
Oh
It's
yeah, it's gone. That's
it's
gone.
gone. It's gone. Typically in the luxury market, those are cash buyers, but these cash buyers know that they can get a deal.
Right. Yep.
So so it's not so much that the luxury is dead, is that market is not attracting that B and C paper or capital anymore. Why? They can't afford the paper no more. Can't.
Right.
It's real
Yeah.
simple. Real simple. Real simple. All right, Cliff. Where and how can I or will you locate great deals?
Okay. And again, this is another topic that I get into, and we about to release our course. It's coming out in a day or so, in the next couple of days. So check out the
Mhm,
website where I
mhm,
go in and start going in on the basics of how
mhm,
you can start locating some deals and some basics on how you can start negotiating and going through that whole process. What I
mhm,
would say is know your market. If you
mm,
want to locate good deals, you first have to understand the market. That's what I
mhm.
mentioned earlier. So don't go to a place where you don't understand the market. Me and Dale can go across
Yes.
the country because we
Yeah.
understand real estate, high level, low level, everything in
Yes.
between. We can go everywhere.
Yes.
But when you're
Yes, we
starting
can.
out and you don't have that experience, pick a local market. What I always say is try to be within maybe 4 hours of your house.
There you go.
Maybe 4 hours. So
Mhm,
within that area, maybe you have to go out about 2, 3 hours, but you understand what's happening out there,
mhm,
right? You can
mhm.
go drive out there, you can go see it. So stay local to you until you understand real estate, understand what you're doing, and then you can start venturing out further and you can start going for the best market in the country once you understand how to win in your own market.
Yes. And guys, we understand that remote flipping is all the rave, and it's a great technique if you know what you're doing.
Right.
That's why he's saying begin 3 to 4 hours around your local vicinity so you can fine tune the skills and then graduate over to remote house investing. If that makes some sense, guys, it's real simple. And also, I would say when it comes to locating deals, this is really for the passive investor. Okay, for the passive investor, what I would say is you probably don't have the time to do the day to day investment methods of looking for farming for properties, running comparables, putting in offers. It takes a lot of work if you don't have the right team in place. And so, what I would say is this here is if that is the case, what you should do is this here is you should look at partner with someone, or whether it be partner with them and you guys are buying a house together. Or if you really don't want to do that, you're another one, I would say look at investing into a real estate investment fund. Okay. If you do it with a fund, invite in wise counsel to show you how you can shield your capital from any loss, or the exact same I'm leveraging your capital to then acquire shares into a fund. You can make a double digit return that can really outpace inflation. Literally outpace it. That makes sense.
Right. Exactly.
Yeah. 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 Well, guys, here's an update on the real estate training course. Dun 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 dun. It's finished. And so now, guys, here are the courses that you're gonna get access to. It should be going live this weekend, Saturday or latest Sunday. Of course, Cliff's course is real estate investing 101, the basics. Okay, that's his, because we have a lot of novice investors. They need to understand the basics in real estate investing. Okay, another course you can actually take. This is kind of university style, guys, a la carte. Okay, is the guide that's subject to investing. Subject to investing is going to come in handy when you begin to locate transactions that they owe more than what is valued at. It's called being upside down. Okay, this strategy is powerful, and I believe it's going to be probably one of the most popular strategies moving forward. Okay, number 3 is you're also going to have a seller finance course, the guide to how to structure seller finance transactions, what seller financing is, and how you can begin to grow your portfolio utilizing seller financing, guys. It's again, that's a very powerful technique as well. All right, guys, and of course, Cliff is working on a more advanced fix and flip, of course, because you can flip in this market if you buy right. Okay. And I'll say this here: whenever you have a higher inflationary rate with higher rates, you have two options that you can actually take. Number one, you can pass that cost on to your consumer, or you can become more aggressive in your negotiating. Which one makes more sense to you? I know what we do. We get more aggressive in our negotiation
Right.
because we don't want to
Exactly.
pass that on to the consumer, because the consumer is who's paying the bill. So if that makes some sense. And then of course,
Exactly.
Jason is finishing up how to build your power team. Okay, he's finished one of the videos. He has 2 more to make, and that's it. And literally, guys, Cliff is going to be walking around Home Depot and Lowe's with a camera and walking you through how to price out your materials. He's going to walk you through that. Cliff, did we ever have that moving forward? When you begin investing in real estate, did we ever have someone walking us through this process?
No, I had no one walking me through it. I learned. I learned. I went to the school of hard knocks, bro. I had to do it myself. I learned by writing checks. That's how I learned.
Me
Good
too.
checks and bad checks. You know what I'm saying? I
Yeah,
had to learn both ways.
yeah,
And so what we're trying to
yeah.
do is prevent y'all from writing those bad
Bad
checks.
checks. There you go.
Right.
Yes, sir, man. And guys, I just tell you this: you're gonna love that. All the courses you're gonna love. This is university style, so I would say take your notes, ask questions. We'll have a VIP community as well for you to begin to ask questions. Our VIP members are gonna be able to have a bi-weekly call with us. It's gonna be in the webinar standpoint. Bring your transactions. We're gonna look at your transactions, help you vet it, see if it makes any sense when it comes to the transaction as well. And if it makes sense, we'll even fund the deal. You'll have Cliff look at your scope of work, let you know where your holes are at. You'll have Jason helping you structure everything the right way, guys. So, and then you have me looking at it from a funding standpoint. So I just tell you guys, this is going to be a very, very, very good course for you guys. And again, thank you for your patience. We didn't want to put out some jangy legs type of course. We wanted to present to you value so that you can say, hey, man, I learned something. Not only value, but want to bring resources to the table as well. You agree, Cliff?
Exactly. So the goal is to be able to provide additional information. We're giving
Yeah.
this away right now. It's free. Y'all get to hear it, hear what we're doing. But we actually want to go more in depth, where we can kind of go into the details. And that way, y'all can ask questions. You could bring us deals, and we can answer specific questions that you have about that deal and help you in your training as you learn. Because I'm telling you, you'll be amazed. Like I talk always about my first deal. When you get that first check, and I got it for 24K, flipping a
Mhm.
property, I said, I'm getting me another one. And
Mhm.
once you get another one, you say, I want to keep it going. So
Yep.
this is that first step in that journey about learning
Yeah.
exactly how to do it and be consistent at it. And then
Yeah.
you just keep it moving.
Yeah, guys. I just tell you, man, I'm excited for you guys. I'm excited for us as well. And we pray to give you guys some value. But again, that is the end of this real estate live training. I hope we added some value to you for you today, guys. Didn't want to go scorch earth on you, but at the exact same time, we had to let you know exactly what's going on so we can then prescribe you the right solution. So, guys, if you have any questions, DM Cliff and I. You can look at the site, find us on Instagram, Facebook, no problem with it at all. And don't get twisted. When we go live, we may come back live and walk you through the actual program as far as the website, things that nature, so you can see exactly what's going on, guys. I think you're going to be pleasantly surprised at the level of teaching that you're going to get, okay, and access to us. How do you begin to make money in any business? Access to mentors. I know that I can call Cliff when I need something from him. And Cliff, by the way, I actually have 167 unit apartment complex you got to look at too. So, you know what I'm saying? We need to get the numbers on that one, guys. Again, it's another deal we can be getting guys in Michigan below wholesale. So this is an apartment complex.
Right.
So again, guys, thank you so much for your time. Cliff, you want to say anything before we log off, big dog?
Nah, hey, like you said, we mentioned a lot of bad things, but we also wanted to come with solutions, and we're offering that as an opportunity to be able to do that. You'd be amazed how much one deal can change everything. So, but man, keep it going. Appreciate y'all listening, and we about to launch it. Get it ready, Dale. So I'm ready.
Yes, sir, man. But guys, before you leave, and while you can, take that picture for your mama and cousin them. All right. Now holla at your partners.
God give thanks. Bless God give thanks. Bless God give thanks.